Hey, how's it going, everyone? Dennis here from primetraders.com. Let me just fix this. I'm pretty sure you all know the market is absolutely wild towards the downside yesterday. And if we actually take a look at a bunch of statistics, which I'd love to show you, this is really fun. Well, not fun, it's unfortunate. Um, Yesterday, within a 24-hour period, unfortunate for the people who lost, and it might be one of you guys too, right? Um, that sure does happen, but also when people are losing money, this is also a very good reminder for us all of what can happen to us too if we are um, negligent with our trading accounts. Anyway, in the last 24 hours, well, basically on Saturday, we had over 410,000 accounts, crypto trading accounts get liquidated, out, boom, gone. And do you know how much money in total was lost? Over 2.6 billion. But, and here's the catch, because 2.6 billion was lost by some people, we are actually in an exchange market, right? So that money that was lost was given to somebody else. Every time you make money, you're making it from someone else. It's not coming from the sky or from some magical little island that's made out of money. It's coming from somebody's pocket. And just like these people lost 2.6 billion in 24 hours, somebody else made 2.6 billion. But where does the main point of what I'm trying to explain come? It comes down to two basic factors. The first one is the short-term momentum on Bitcoin. Clearly, it was down. I always say this. The markets speak only one language. It's called price action. And most people don't even bother understanding how price action works. We had a high at 69K, right? That's the high. There is 69K. Boom, it hit. What has been happening ever since 69K actually hit? What happened was we were making lower highs. Now, using our system, you could have, very simply, or the way we trade, you could have very simply grabbed these moves using the fibs, waiting for momentum to change, and then executing short. So here, 38.2, momentum starting to shift down. You don't need to grab the top. You just need to ride the momentum. And what do we see here? Let's go over the basics. So we have a high. I'll remove this. We have a lower high. We got another lower high. And then we have another one. And then another one, right? I don't even have to draw this. You clearly see this. Lower highs. And as we form the final lower high, which we just made a video, you can check it out on our blog, on our website. And then you see this crash. Now, I don't believe that this is going to continue because the short-term trends down, you actually need to use multiple time frame analysis to make proper trading decisions. So we can clearly see that, the overall long-term trend is kind of moving up, right? Because we made this high, head and shoulders, moved down, and what did we do? We formed a higher low in a bullish trend. Now, because we didn't break this previous low over here, I believed, and this is what we released, and check out our feed, go into our feed and you'll see that we released this information. We said, this is holding, we're going long. And we did go long. We didn't maximize the move, but we did go long. So what is the structure of this market? The market moves up, makes a pullback. What is this? This is a higher low. So now we have a new high breaching the previous highs, correct? We just breached the previous highs. We have a new high over here. We're trying to form a higher low. And I really believe if you grab this high and this low and draw the fibs this way, this is how we draw them. This is what we do. It works and we use it. 21% rejected, closing at 30%. The market's looking good for upside. And if you focus on this little level over here, you see that there is a decent rejection area. So if I do that over here as well too, you again see that there is another rejection area. So clearly this area of interest could actually support this market and buyers could be found. How much the market goes up, I don't know, but it looks good for upside. Now, if we go to Ethereum, that's the one that we're taking long, it actually looks even more healthy and healthier than Bitcoin. We have the high. Let's start drawing this. We have the lower high, which is actually holding perfectly. We have high. That's a new trend starting. Momentum's moving up. And now we're holding. What are we holding? We're holding a previous rejection area. Lots of buying over here, by the way. And if we take the fixed volume profile, fixed range, and do this, we actually see that we are in a bullish market. Based on the way I use this, this is a very solid bullish market, and we are long. To where? I'm not sure, but based on the fib extension, I think that we could head over to 61.8 perhaps if there is enough momentum. So anywhere between 6.2 and 7k could be a logical area to get out. We day trade, so I'm not gonna try and ride this, but based on the fact that I now have the momentum of this market and I got a crazy good pin bar right there, look at that, boom. Now I know that all I need to do is follow my day trading system. By the way, we released a course for that too yesterday. All I need to do is follow that system, and every time there is a higher low and my indicators say go, all I need to do is execute along. And when I'm trading with the trend, I'm maximizing my returns. Now I can do that for maybe 5 times in a week, and I'll be good. I'll Because of leverage and everything else, I'll be able to earn as much as if the market has gone here due to compounding and leverage and position sizing. Very simple. Anyway, let me know what you guys think. I think that crypto is holding and so far indicates, at least on the daily charts, that the market could move up. When it could move up, I don't know. That's not my decision. But I'm going to focus on my short-term charts, my 1 minutes, my 500, my 5 minutes, and my 200 ticks to determine where this market could be going. And if the momentum changes and remains down, guess what? I'm going to reverse my trading idea and I'm going to go short. Anyway, I hope I explained everything in the best possible detail. Could have. Good luck trading. And if you faced any losses in this market, try to learn from it. Ask yourself, why did this happen? You'll very quickly understand that you're probably coming down to a couple of emotions of greed, fear, hope, and then just kind of zero in into that and just remember what you were thinking when your mind told you to get out of the position, but you didn't. You really didn't. You held on. Think about it. Okay, there is no, it results, by the way, with FOMO, a totally different video, but I'll just give you a quick bonus one on that. FOMO is fear of missing out. The key word here is fear. So that's the one we need to focus on, and you need to become more courageous as a trader. You need to understand the facts that when you use a little bit of meditation, you kind of very easily you can come to the fact that what, I can wait, get out of this loss, wait for a definite signal, and then get in. Anyway, that's a different discussion. Anyway, good luck and happy Sunday.